Whales are moving silently, pulling billions of tokens from major exchanges in a single massive transaction. The charts are screaming a potential golden cross, but one single number stands in the way of a historic breakout: 952 units. This is the line in the sand, the critical resistance that Shiba Inu must conquer to unlock a potential 234% rally. But what am I even talking about? Well, let me explain. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The current market environment for Shiba Inu is defined by a tense consolidation phase, following a significant 20% decline over the last 2 weeks of November 25. This price action has brought the token back to its 25 low, with the average price hovering around 800 units. This level, while concerning for short-term holders, is being viewed by technical analysts as a potential floor, setting the stage for a dramatic reversal. The key to this reversal lies entirely with the 952 unit level. This is not just a random number. It represents the high water mark from the November 10th rebound, a level that has since acted as a psychological and technical ceiling for the price. For the Shiba Inu community, the 952 unit resistance is the single most important technical hurdle to overcome before the end of 25. A successful breach of this level would confirm a bullish reversal pattern that has been slowly forming in the charts, potentially invalidating the recent bearish momentum. The stakes are incredibly high, as the failure to break this resistance could send the price back down to retest the 700 unit support, a move that would prolong the current market uncertainty. The narrative is simple: 952 units is the gateway to the next major bull run, and the market is holding its breath to see if the token has the necessary momentum to push through. The most significant event in the last 24 hours was a massive outflow of Shiba Inu tokens from a major exchange. On December 7, 25, a mysterious whale wallet withdrew over 4.13 billion Shiba Inu, an amount valued at approximately $35 million. This type of large-scale withdrawal from an exchange is typically interpreted as a sign of accumulation, suggesting that a major player is moving their holdings into cold storage for a long-term investment, rather than keeping them on the exchange for immediate sale. This whale activity, which was immediately flagged by community trackers, provides a strong counter-narrative to the prevailing market fear. In stark contrast to this bullish whale movement, the Shiba Inu burn rate has experienced extreme volatility. After a dramatic surge of 274% just 24 hours ago, which saw over 34 million Shiba Inu tokens permanently removed from circulation, the burn rate has now collapsed by 88%. This sudden drop comes as the broader crypto markets await a crucial Federal Reserve rate decision, causing traders to pause their activity. This disconnect, a massive whale accumulation on one side and a sharp decline in the deflationary burn mechanism on the other, paints a mixed picture for the token's immediate future, intensifying the focus on the 952 unit price level. As of today, December 8, 25, Shiba Inu is trading at approximately 849 units. The token's market capitalization stands at over $5 billion, with a 24-hour trading volume of approximately $101 million. The price has shown a slight recovery, trading up 6% weekly, but the reaction to the recent whale movement has been muted. The market appears to be in a state of cautious optimism, where the bullish signal from the whale withdrawal is being offset by the technical barrier at 952 units and the broader market's uncertainty. The trading volume, which reached $101 million in the last 24 hours, is a key metric to watch. While this figure is notable for the meme coin category, analysts note that the overall trading volume has declined sharply throughout 25, with a notable absence of large whale wallet activity in the general market. This price volume disconnect is a red flag. A sustained breakout above 952 units would require a significant influx of trading volume to confirm the move, and without it, any attempt to breach the resistance could be quickly rejected. The market is currently consolidating, building pressure, but the direction of the eventual breakout, up towards 952 units or down to retest support, remains highly contested. The technical evidence supporting a potential breakout is compelling. Analysts have identified a bullish divergence pattern that began forming in late November. This pattern, where the price makes a lower low but a momentum indicator makes a higher low, often signals that the selling pressure is weakening and a price reversal is imminent. Furthermore, the token is currently holding firm at the 20-day simple moving average support, a key technical level that buyers are actively defending. The most dramatic technical signal is the potential for a golden cross in the coming days. A golden cross occurs when the short-term moving average crosses above the long-term moving average, a pattern historically associated with the start of a major bull market. If this cross materializes, the first and most immediate target would be the retest of the 952 unit resistance level. On the sentiment side, the market is flashing an extreme fear index score of 23. Historically, such low scores indicate that the market is oversold and that fear has peaked, often preceding a sharp recovery. This combination of technical bullish signals and extreme bearish sentiment suggests that the market is coiled and ready for a major move. The on-chain data, while showing a recent burn rate collapse, also shows that the overall depositing activities on exchanges have nearly halted, with daily transactions stabilizing, suggesting that current holders are not rushing to sell. The analysis of the 952 unit resistance level is clear. A decisive break above this point could trigger a massive price surge. According to recent analysis, a successful breakout could lead to a 234% rally. This prediction is based on the confirmation of the bullish reversal patterns and the historical tendency of Shiba Inu to experience sharp, parabolic recoveries after prolonged periods of consolidation and fear. The target of this rally would be a retest of the 24 highs, potentially pushing the price to levels not seen since the peak of the last cycle. The implication of the $35 million whale withdrawal from a major exchange is twofold. On one hand, it signals a strong belief in the token's long-term value, as large holders are moving their assets off exchange. On the other hand, the sheer size of the withdrawal, over 4.13 billion Shiba Inu, could temporarily reduce the available supply in the exchange, potentially creating a supply shock that could help fuel the price move if demand increases. However, analysts caution that this move could also be a strategic hedge or a transfer to a different custodial wallet, and should not be solely relied upon as a bullish indicator. The true implication is that the smart money is positioning itself, and the retail market must now decide whether to follow the whale's lead or wait for the technical confirmation at 952 units. The Shiba Inu community remains highly engaged, with much of the focus centered on the ecosystem's development. The most anticipated update is the plan to restart the Shibarium bridge. Shibarium, the Layer 2 solution for Shiba Inu, is aimed at improving scalability and reducing transaction costs, and its successful implementation is viewed as a critical long-term catalyst for the token's utility and price. Developer hints suggest that the team is prioritizing stability and security before a full relaunch, a move that has been met with cautious approval from the community. Community reaction to the volatile burn rate has been mixed. While the recent 274% spike was celebrated as a sign of deflationary progress, the subsequent 88% collapse has led to renewed discussions about the effectiveness and consistency of the burn mechanism. Community trackers show that the total amount of Shiba Inu burned remains a key metric for sentiment, and a sustained high burn rate is necessary to maintain the long-term bullish narrative. Despite the short-term volatility, the overall sentiment on social media and forums remains resilient, with the focus shifting from the daily burn numbers to the impending technical battle at the 952 unit resistance. The short-term forecast, 1 week, 1 month, is entirely dependent on the 952 unit resistance. If Shiba Inu can achieve a decisive daily close above 952 units with significant volume, the short-term target immediately shifts to the 1,000 unit level, and then quickly towards the 1,300 unit resistance. This move would confirm the bullish reversal and likely trigger a cascade of buying pressure from technical traders. Conversely, a rejection at the 952 unit level could see the price retreat to retest the 800 unit support, or even the 700 unit floor, prolonging the consolidation phase. The long-term forecast, 3 months, 3 years, is significantly more bullish, provided the 952 unit breakout occurs. If the predicted 234% rally materializes, Shiba Inu could be on a path to remove another zero from its price, reaching levels around 4,000 units. This long-term outlook is also heavily tied to the successful relaunch and adoption of Shibarium, which would provide the fundamental utility necessary to sustain a multi-year bull run. Analysts suggest that the token is currently in a crucial accumulation zone, and the next few weeks will determine whether it enters a new parabolic phase or remains range-bound for the foreseeable future. While the technical signals and whale activity suggest a strong potential for a breakout, a balanced opinion requires acknowledging the significant risks. The primary concern is the price-volume disconnect. The recent price stability has not been accompanied by the necessary trading volume, which suggests that the current price action is fragile and susceptible to sudden downturns. The sharp decline in overall trading volume throughout 25 is a major red flag, indicating a lack of broad market participation. Furthermore, the extreme fear index score of 23 highlights the underlying nervousness in the market. While this can signal a bottom, it also means that a negative news event could easily trigger a panic sell-off. The volatility in the burn rate, collapsing 88% after a surge, also underscores the inconsistent nature of the deflationary mechanism, which is a key pillar of the Shiba Inu narrative. Investors should exercise caution, recognizing that the 952 unit level is a high-risk, high-reward pivot point. A move above it is bullish, but a rejection could lead to a painful retest of lower support levels. So here we stand at the edge of a technical cliff. The 952 unit level is the final boss, the one number separating consolidation from a potential 234% surge. We have the whales accumulating, the chart screaming a golden cross, and the market holding its breath. The next 48 hours will be the most critical of late 2025. Will Shiba Inu smash through the resistance and start the next parabolic run? Or will it be rejected, sending us back to the drawing board? The answer is about to be revealed. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.